So you're tired of blowing up your trading accounts and losing all your money? Well, here are the 5 reasons you need to know about why traders fail in Forex. Listen, that last one, people don't even know they're making, so make sure you stay until the end. You ready? Let's go. Reason number 1 is over trading. Yeah, listen, we get it. We want to make the money fast. But over trading is not the way to go. Trading too frequently, opening too many positions, and risking more than you can afford to lose is a surefire way to blow up your account. Reason number 2 is not using stop losses orders. Stop loss orders are like a safety net. They protect you from potential disasters. But if you don't care to use them, you might as well be flushing your cash down the toilet. Hey, one bad trade can wipe out your entire account. So always, I repeat, always use stop loss orders. Reason number 3 is lack of discipline. Trading requires discipline, patience, and a level head. When you let your emotions take over, you end up making irrational decisions that can cause you to lose all your money. Stick to your trading plan and avoid impulsive moves. Reason number 4 is there's not enough education. Forex trading, it's not a get-rich-quick scheme, as much as we want it to be. Trading in Forex requires a lot of knowledge, research, and understanding of the market. Without that proper knowledge, you're basically gambling, and we all know how that ends. Reason number 5 is poor risk management. This is one of those common mistakes that Forex traders will make in poor risk management. You can have the best strategy in the world, but if you don't manage your risk properly, it's all for nothing. Never risk more than you can afford to lose, and always have a risk management plan in place. So there you have it, the top 5 reasons why Forex traders blow up their accounts before they even get started. Remember, Forex trading can be a rewarding experience if done correctly. So if you can avoid these mistakes, you'll stay safe out there, trader.